Welcome back to another edition of the Morning Mailbag, where I, Coach T, answer your questions from our clubhouse, our Twitter, our email, Facebook, pretty much any way you can get a hold of us. Today I'm answering a question from Christian, who contacted us directly through email. Christian Lungeback, who is a real loyal member of the team, been around us for a long time. Actually, he's on one of the episodes of the podcast. So if you want to go back to the Trading Justice podcast archives and listen to Christian's episode, it was a really interesting story and journey that Christian's had as a young man, and becoming an entrepreneur and a trader and an investor. So Christian, you get priority, my friend. Now Christian has this is a two-part question. Number one, how do I adjust my posture before the opening bell to take advantage of the day's action? Now let's talk about this for a minute, and actually let's take a look at the Trade Center here. Give you an idea of what we're talking about, and hopefully, Christian, I can hit on a few things. And if not, we can always talk about it more on a podcast or a coach's show or something like that. We'll try to keep this one pretty quick. So it's very common that you'll wake up, you'll look at the market, and the markets are moving, okay? For example, this morning, the markets were set to open up with some strength. And 4 a.m., 6 a.m., markets are getting ready to open up, and then boom, they open up and they have a big upward day. If you had come into the day neutral or bearish, you would have wanted to adjust your thinking on the overall markets. We could have seen this in pretty much every chart. In the morning, before the markets opened up, they were ready to open up with strength. They did. The markets had an up day. Okay? This could easily be turned on its head on any given day. If the markets are set to open down, they're ready to have a down day. Well, what do you do if your account is not in position to take advantage of that, or that you're going to be whipsawed around? Here's a simple thing, Christian, that I would start with. Number one is go straight to your watch lists and start prepping and planning for positions that you might be able to enter into right away. Okay, so if you've got some free cash on hand, some free buying power, as they say, go through, and this is where watch list creation, watch list development, pretty much at all times, there's got to be 5 or 10 stocks that you're watching bullish, you're watching bearish, you're watching neutral. The more organized you are, the better you'll be to take advantage of it. So for example, if I click on the Thinkorswim watch list, I go down to one of my personal watch lists, on a day that the markets are going to go up, maybe I'll bring out one of my bullish watch lists, go to the charts, try to find and lock them in. Now, one thing in the morning, by the way, in Thinkorswim, you want to go into like an intraday chart so you can get the after hours action. But even like First Solar here, it was set to jump up. I could hurry and put in a trigger or a trade right there. I can go through my position. SanDisk, this one after hours ready to jump up. I had resistance right here. I could have hurried and taken advantage of that. This is what we call natural hedging, okay? And this is advanced theory, and we'll have to do it in a coach's show, or maybe I can do a longer video for the trading room or something like that. These mailbag videos I like to keep around 10 minutes or less, sometimes even 5 minutes. But there's two types of hedging, basically. There's what we call forced hedging, and then there's natural hedging. And actually, now that I think about it, there's really three, because these are what we call, this is all in the family of account hedging, and then you have forced and natural. Forced hedging is when you take your account, you beta weight your delta, you calculate the amount of risk you have, you buy puts or futures contracts or something like that to hedge off the risk in your delta. Natural hedging is as simple as this. Do you have only bullish trades and you need to add some bearish ones? Do you have only bearish trades and you need to add some bullish ones? Are you only neutral and you got to add both of the other ones, right? It's what's the balance and the nature of your account. One of the things I do when I work with students individually one-on-one is I help them understand how they're designing their portfolio from just a bull bear neutral standpoint, so they understand what they're approaching the market on in a daily basis. Forced and natural hedging. Then there's a third hedging I'd referenced, and that's where you take individual position hedging. I believe firmly that the left category, account structure, is more important. I think this is more important, and this is secondary. Because most new traders should simply get out of trades that aren't working. You shouldn't try to fix a bad trade. If you just get out when you're wrong and you cut the loss and you move on and you take the hit, it's a little easier, a little better for most traders to deal with. Individual position hedging, when you're hedging the stock rate at the rate of delta against a credit spread and all that kind of stuff, you're just making something far too complicated. There's an old saying, the webs we weave, and they put us in complicated positions that we don't necessarily know how to get out of. And so that's not necessarily the best plan. I actually prefer just somebody understanding their account from an overall standpoint, forced or natural hedging. Now let's take a look at just this virtual account that I'm looking at right now. For example, and one of the things I do in Thinkorswim is I flip from the new layout to the old layout. Very, very common. I mean, when I want to look at certain information, I'll go to the old layout. And the old layout gives me all of my deltas in one column. This account right here had 434 delta points. Okay, a bearish trade, these other ones were bullish. Now, if I look at this and I beta weight against the SPY, it brings the delta down, but it makes me understand. Now, here would be an example, Christian. If tomorrow morning the markets are dropping in the morning with the futures market and I need to do something with that, I need to come over here and I need to add bearish positions. Okay, so I might do a bearish watch for February, right? Build out my symbols tonight and make sure I'm ready to take advantage of a stock that's dropping that is fitting with the market conditions. So simply watching your overall delta, watching the overall balance in your account can be a good way to do this. Now, there will be some of you guys out there watching the video that are thinking, Tim, that's way too advanced for me. And for many of you, it would be. Okay, this is where you have to identify where you're at in your learning. Are you a new trader who needs to just simply focus on putting trades on and keeping it very simple? Well, good, do that. Don't get into all the advanced stuff. Every time you hear a coach talk about a strategy, doesn't necessarily mean you have to go use it. Now, this is more of an intermediate to advanced level idea where you're watching the overall balance in your account. If you want more information on that, we could possibly do some modules or some videos. It's a really interesting topic, something I'm happy to talk about quite a bit. Now, second part of your question, Christian, is a credit spread question. And actually, I think I'm going to do that in a second video. So we're going to separate it out, and it will be a two-part morning mailbag in the same day. So I'm going to close this one out just to cut the video from here. And thank you for watching these videos. I hope you guys are enjoying them. And we'll get to Christian's second question here shortly. Thank you.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.